Mr. President.
Senator from West Virginia.
Mr. President, I have 9 requests for committees to meet during today's session of the Senate. They have the approval of the majority and minority leaders.
Duly noted.
Thank you, Mr. President. I wanted to come to the floor today to talk about the bill that we have in front of us, the Economic Growth, Regulatory Relief, and Consumer Protection Act. That's a mouthful right there. But what it is a culmination of and a reaction to the Dodd-Frank bill, which was passed in 2010 in a reaction to the crisis of 2008 and 9. And I think it's important for us to note where this is directed. In Dodd-Frank, so much of the focus was placed on large banks and larger institutions. But what's been lost in the debate, and what we really, some of the unintended consequences, I think, was how that massive and burdensome regulatory legislation would affect the smaller banks, the community banks, and the credit unions. Senator Rounds in South Dakota, Senator Blunt in Missouri, we have more rural areas for the most part, and these community banks and credit unions are absolutely critical to our individuals, but also to our businesses. And they've been bearing the brunt, really, a lot of Washington's response to that in the form of Dodd-Frank. We know that larger financial institutions, they have the capital, they have the resources, the staff, and the expertise to handle a lot of these regulatory requirements that are placed on them. But our smaller institutions have really struggled under the weight of Dodd-Frank. Now, we didn't come to this point today without a lot of discussion, without a lot of compromise, and without a lot of thoughtful input from a lot of different entities to figure out the best way to serve all of our states. These smaller institutions play a critical role in a state like West Virginia. Our small businesses rely on them to open and succeed. Our communities rely on them to expand, and our economy relies on them to grow, especially in our rural areas. But our community banks and credit unions have really had to shift their attention away from what they know best, which is relationship-based lending and borrowing, and put it more into this regulatory environment, devote bank resources and time and energy and effort and legal resources to make sure that you're complying with regulations that are really intended for the larger financial institutions. So it's been tough. From 2010, which is the year Dodd-Frank was enacted, until 2016, the number of community banks in our country has decreased by 1,600. That's a significant decrease in the number of community banks. So with little or no access to community banks, our Main Street borrowers have been forced to turn to the larger institutions for loans. Well, that's fine in terms of, but you know, a lot of times our Main Street businesses and individuals get lost in the shuffle. Sometimes it's stiffer terms, and sometimes it could mean rejection. So we're talking about farmers, we're talking about families looking to buy a home, and of course, again, our small businesses. We're really talking about the hardworking men and women trying to live that American dream. So while with smaller institutions constantly forced to merge with larger ones to help shoulder the cost of regulation, that relationship-based model that has served our communities for decades is disappearing. And I think it's time now, after much thought, to ease that burden and right-size those regulations on our smaller financial institutions. And that's exactly what the Economic Growth, Regulatory Relief, and Consumer Protection Act does. It is a balanced approach to regulation. It takes into account the differences, some of them vast differences, between the larger and smaller financial institutions. It improves access to mortgages, and something I've been interested in since my service on the House when I was on financial services and I chaired financial institutions. The mortgage issue was something that I introduced and worked on many, many pieces of legislation to provide rural areas with greater access to mortgages. Let's just talk about what happens if young couple's trying to get a mortgage, or maybe it's even a med student coming out of medical school trying to get a mortgage for a loan, no real income yet. But in a relationship banking situation, that small banker or community banker knows that's going to be a safe bet in the end of the day. And a lot of our mortgages have been so constructed by Dodd-Frank that people haven't been able to get the mortgages. And let's face it, the ones that face the biggest challenge are the ones we were supposed to be trying to help with Dodd-Frank, and those are at the lower, mid-lower income range that maybe have a credit issue or some other extraneous issue that in a cookie-cutter environment, one size fits all, doesn't fit their size, and they end up without the opportunity to own a home. There's also very critical consumer protections in this bill. Protections for our seniors. I'm going to go out on a limb here and say that this is probably one area that we haven't done as a Congress, and joining together with financial institutions and other consumer advocates to protect our seniors from being preyed upon financially. It's rampant. Sometimes you're preyed upon by your own family. And so the Senior Safe Act, which I was with Senator Collins and Senator McCaskill's bill, protects our seniors from financial exploitation. This is part of this bill, and fraud, and this has been a consistent priority of mine. It also works to protect our veterans, who can sometimes be very vulnerable when seeking financial assistance, and also for individuals who've gone through tough times financially. The legislation clarifies a lot of the CFPB regulations to help benefit those consumers. Student borrowers, student loans. We talk a lot about the increasing debt that our students are incurring, the difficulty that students after they graduate have to pay down these debts. But a bill that I helped to introduce with Senator Peters is included in this agreement. And what it does, it says when student borrowers from private loans have the opportunity, they can rehabilitate their credit following a default. They can't do that now. If you have a government loan, you can do that. But if you have a student loan through a private institution, you can't do that. So we're seeking parity between a government loan and a private loan. And we think this will help those students repay with a relook at their finances. So finally, in light of recent data breaches that have put many at risk, this legislation puts in important cybersecurity standards and safeguards. Every committee we're on talks about cybersecurity. The financial institutions, I think, have been on the leading edge of trying to detect cyber invasions into information or into their financial institutions. We have to stay one step ahead here because this is very fast moving. So these are all priorities and solutions that I've worked hard as a leader on the House Financial Services Committee, and now as I chair the Financial Services and General Government Appropriations. For community financial institutions, regulatory relief and economic growth go hand in hand. We just passed the tax relief bill where a lot of our small businesses are able to increase their bottom lines, grow their businesses, grow jobs and wages. We want to see those financial institutions grow alongside that. Working men and women and small business owners deserve a fair shot at mortgages. It's the American dream, owning a home. And they deserve a process that takes into consideration the kind of community where they live. We deserve relief from these burdensome and unbalanced regulations that we've been forced to contend with for too long. So the Economy, Growth, Regulatory Relief, and Consumer Protection Act does just this. It gives us an opportunity to send a clear message to Main Street, and that is, we support you. We support you. And I encourage all of my colleagues to stand with me. I want to thank Chairman Capito for his dedicated insistence that this come to the floor of the United States Senate, that we have bipartisan support, that it's very well thought out. It doesn't have the whole kitchen sink in it. It has the provisions that I think are the top priority for our financial institutions, but also for all of us who represent Main Street here in the United States Senate. So with that, I would yield my time. Thank you.